Hey everyone, welcome back to Corporate Decoder. Today, PRPO just filed their current report and I'm seeing a key revenue figure that tells a story. Quick note, this is not financial advice, just my take on public filings for educational purposes. Precipio, Inc. just announced their second quarter results and it looks like they are hitting some important milestones. Let's dive into what this filing tells us about their performance. This document is a Form 8, which is basically a report that companies file to announce major events that shareholders should know about. Think of it like a timely update on something important happening within the company. The date here is the 14th of August 2026, and this report is talking about events that happened on or before this date. The company we are looking at is Precipio Incorporated. They are involved in the healthcare and diagnostics sector. One of the key things to note is that their common stock is listed on the NASDAQ capital market under the ticker symbol PRPO. This is important because it means they are a publicly traded company, and their stock performance is something investors watch closely. Now, this is where it gets interesting. This section is all about the company's financial results and its overall health. On the 14th of August, Precipio released their financial results for the second quarter that ended on the 30th of June 2026. This is the core of what we are analyzing today. We are seeing news that their Q2 revenue surpassed $7 million and they are back to positive Adjusted EBITDA, which is a measure of profitability. This is a pretty big deal, especially considering recent headlines mentioned a going concern warning. A going concern warning is like a red flag from auditors saying they have doubts about the company's ability to stay in business for the next year. To turn that around and hit record revenue is a significant pivot. This part of the filing simply points to the exhibits that are attached, which in this case includes the press release itself. So the actual juicy financial details are in that press release, which is being provided as part of this filing. Looking at the external information, Precipio Incorporated, ticker PRPO, is a healthcare diagnostics company. They have a market cap of about $42 million and their stock has been trading in the range of roughly $13 to $33 over the last year. With the current price around $23.50, they have a relatively small team of about 61 employees. The recent news is a mixed bag, but the key takeaway from the filing and the accompanying press release is that their second quarter revenue has hit a record above $7 million. This is a significant increase, up 24% compared to the previous year, as one headline pointed out. More importantly, they have returned to positive Adjusted EBITDA, meaning their core operations are now generating profit. This is a crucial turnaround from a situation where there were concerns about the company's ability to continue operating. This kind of turnaround from a going concern warning to record revenue and positive Adjusted EBITDA is a strong signal. Companies that receive going concern warnings often face significant challenges. To overcome that and show such strong revenue growth and improved profitability is a testament to their operational execution. It suggests that whatever strategies they put in place are starting to pay off. When we look at the broader market context, there have been other companies that have faced similar going concern issues. For example, companies like Bed Bath & Beyond or Rite Aid have had to undergo significant restructurings or have struggled to recover. Precipio's reported results suggest they might be on a different, more positive path. The fact that they've managed to achieve record revenue and positive Adjusted EBITDA means they are not just surviving, but they are growing and becoming more financially sound. This is exactly what investors want to see, especially after periods of uncertainty. It demonstrates that the business model is working and that management is effectively steering the ship. However, we should also keep in mind that the stock did slip after their first quarter earnings, even with revenue growth. This might indicate that the market is still cautious or perhaps looking for more consistent performance over multiple quarters. It is also worth noting that despite the positive news, the company is still relatively small, with a market cap around $42 million. This means there is a lot of room for growth, but also that they might be more susceptible to market volatility or competitive pressures. The top institutional holders like Vanguard Capital Management and BlackRock, holding a few percent each, suggest some level of institutional confidence. However, their ownership percentages are not extremely high, indicating that there is still a significant portion of the company owned by other investors. In conclusion, Precipio Incorporated's latest filing and press release paints a picture of a company making significant progress. The record revenue and return to positive Adjusted EBITDA are very encouraging signs, especially when viewed against the backdrop of past challenges. The key will be to see if they can sustain this momentum in the coming quarters and continue to build on this positive trajectory. The risk I am watching is whether this positive trend can be maintained and if it will translate into sustained stock price appreciation. My biggest concern is that while these are great Q2 numbers, the market might still be wary after previous warnings. What I'm actually looking for is consistent performance throughout the rest of the year to confirm this turnaround is sustainable. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If you found this analysis helpful, please like, comment, subscribe, and join our Discord community linked in the description.